Let's have a look at a few mathematical models that worked pretty well in the past to predict cycle tops and cycle bottoms. Here we've got the AHR 999 index. It's a crypto revenue mining based index, and it did give quite nice buying signals in the past. Here in 2022, after the very first bear market, then in 2025 after Mt. Gox and Silk Road collapsed, in 2019 after the ICO bubble burst, then over here during COVID, then after FTX and Terra Luna, and even in 2023, a buying signal not a lot of other indicators gave, but that was pretty accurate as well, right? Bitcoin moved from 30k to 125k. We're very close to getting another buying signal here again. Now the indicator tends to turn green relatively early, as in it gives us a range when to buy. The extreme values, however, that show maybe the best month when to buy, they are quite a bit lower compared to the green area, which would indicate a bit more room to fall. We might start buying once we hit the green area, but the real big purchases probably should wait until we get closer to the support line. Also interesting is how the miner revenue tends to decline over time, as in it's getting harder and harder for the industry. Now let's have a look at the balanced price. The balanced price is a metric that shows us a potential bottom in Bitcoin. It's currently at 43,200. And if we do enter a bear market from here, then there is the potential to fall by another 50% from the current prices. Now there's something I don't like about this indicator. That is, it sometimes goes down slightly as well. It's not always going either up or sideways. And so when currently the bottom is at 43k, that doesn't mean that it can't go down to 40, 35, maybe even 30k. And that's why I prefer the coin value days destroyed floor. It's currently at 48k. It either goes up or sideways. In other words, it's monotonically increasing. And every single time we have seen Bitcoin bottom at exactly that value. Now, just because the indicator worked very well in the past doesn't mean that it has to work in the future as well. Some models did break after being very good supports up until that point. If you're getting value out of this content so far, then feel free to give this a like. You can also subscribe because I publish videos regularly. Of course, any support is very much appreciated. It will help the channel grow. For example, this here, right, the 200-week moving average, it was a very good support up until 2022, when it said that the bottom should be at 24k, yet we went down to 16k. So just because something used to work in the past doesn't mean that it has to work perfectly in the future. Still, I do think that the CVDD is a good measuring stick. We shouldn't necessarily lever our position up to a degree that we lose everything once we fall to 47k. And still, right, it's definitely a good opportunity to get more exposure. Now, in the end, we all just make guesses, right? Nobody knows where prices are going. We all have to work with something. And I do like approaches that tended to work in the past. Even though they might not be perfect, at least it gives us an idea whether or not something could be a good entry opportunity. Have a look at the Meyer multiple. Again, it gives us ideas when we might be very high or very low. And we aren't yet low enough to consider current prices being particularly cheap. I always want to see maximum pain. I want to see how most people are in losses. Here's the percentage of supply that's currently in profit or in losses, and we tend to turn around when the majority of holders is currently in losses. We are currently at 68% in profit, so there's still another 18 percentage points to go until we might see an ending of the current sell-off. Really, here is the main problem. The long-term holders are selling even though we don't have any new all-time highs in Bitcoin. In the past, we only saw the selling during a bull run. So this is when new people entered the space, and when the courageous investor that bought the bottom, he or she sells into price appreciation. This is what we have seen several times in the past. Whenever the Bitcoin price went up, the one-year hodl wave tended to go down. This time, though, we see how the price is coming down. At the same time, the one-year hodl wave is coming down as well. So the reason for the selling right now is not a potentially heated market of quick price appreciation. This time the reason for the selling is something else. Now, I don't know that something else, but I don't think it's any good. There are many ways to try to figure out in what price range Bitcoin trades. There's, for example, this regression line. Whenever we are close to red, we might want to sell. Whenever we are close to blue, we might want to buy. Currently, the blue floor is at $31,000 and the top limit is at $360,000. Are we going all the way down to 31K? It probably depends on what traditional finance is doing. If Nvidia suddenly crashes, if the AI bubble was to pop, then 31K is definitely possible. But if traditional finance continues to rally, I don't think we're going down all the way to that level. We're probably going to recover somewhat earlier. That's at least my guess. Now, I'm not talking about this too often on this channel, but I actually have a traditional finance background. So I've studied investment management and financial analysis in Hong Kong. And so I do think it's very important not to be just hyper focused on crypto. It's very important to be diversified across different asset classes as well. Asset classes that aren't so much correlated with crypto. So even if crypto goes down, that we want to own assets that don't go down, that might even benefit during a crisis. The issue is that stocks are also historically very high. The price to earnings ratio of the S&P 500 is currently at 40. So that implies a real return of 2.5% per annum, less than the risk-free rate right now. This, by the way, this was the .com crisis and this was the global financial crisis. Bitcoin was created over here. The problem is that gold, relative to the money supply, is also quite high. It has only been higher at the end of the 1970s. And we are above the historical average. That's the dotted line. And so this is where this channel is different to other crypto channels. I try to look at the picture holistically. And if you want to dive deeper, I have made many tutorial videos on not just crypto, but on how to do proper risk management and how to do proper asset protection and how to diversify across asset classes and how to optimize long-term risk to reward. This here is a monthly chart of my net worth. And during that time, we did have two massive bear markets in crypto. But if we rebalance our portfolio properly, then we can still make constant outperformance. That's the whole idea. And so if you're in it for the long term, right? If you don't just want to make the moonshot bets that might or might not pay out, if you're actually into wealth building long term, then the premium membership might be for you. A link to premium pops up here on the screen. Looking very much forward to seeing you there as well. Thanks for watching and see you next time. Cheers.